Hello guys, in this video, we'll discuss a very important question. Why do 90% of the Indian traders fail? Now 95% sounds like a pretty high number. Sometimes it may put you to really believe it. So, here, read this. Recently, the SEBI has shared a report where it is written that over 89% of the traders lose money in trading. So the question is, what's going on? Where these traders are going wrong? And how can a beginner avoid making these mistakes? So let me tell you from my experience, the top 7 reasons why most of the Indian retail traders fail and what you can do to survive in this market. The number 1 reason that traders fail, that they have no strategy. A lot of traders don't want to acknowledge this, but the fact is that they have no idea about what they are doing. Their idea about strategy is some combination of technical indicators that they have read or heard somewhere. I'm sure you must have seen some of them. Strategies based on super trend indicator or RSI or MACD or some combinations of these indicators. But the reality is that these are not strategies. These are just technical setups, and no one can consistently make money using these setups alone. Professional traders, the other hand, use time-tested strategy that are based on the behavior of the market and the behavior of the market participants, and this gives them the edge towards other traders. We'll make more videos on trading strategies, so don't forget to subscribe to this channel. The second reason why traders fail is that they trade way bigger than their capacity. I've seen traders with 1 lakh of capital taking trades worth 10 lakh rupees or even 15 lakh rupees. These guys basically want to get rich quickly, and that greed that they take excessive leverage. Their mindset is very similar to that of a gambler who puts all his money in one bet. So if he gets lucky, he makes a lot of money. But if he loses, the game is over. He is out. Professional traders, on the other hand, don't gamble. In fact, they're the best risk managers you will ever find. So if you want to be a professional trader, start thinking like a risk manager, not a gambler. The third reason why traders fail is that they have no emotional discipline. They are driven by emotions rather than logic. In one single day, they experience all kinds of emotions. They get excited, they get impatient, they get frustrated, they get confused, and yes, they get become greedy and fearful. See, everybody has emotions, but it is one thing to have them and completely different to act on them. Professional traders know that acting on emotions is a sure recipe for failure. They understand that trading is a business and it should be treated as such. What I have realized is that trading should become as boring and as rule-based as possible so that your emotions can never take over your rational brain. The fourth reason why traders fail is that they don't learn from their mistakes. They keep making the same mistakes over and over and over. And sometimes, even after realizing them, for example, a good friend of mine is to take trades right at the market opening, exactly at 9:15. I explained him several times that the market is extremely volatile in the first 10 minutes and therefore it's not a good idea to take trade at the time. But he just couldn't resist himself from taking these trades. He almost felt compelled to take trades. Only after making these mistakes for several months and losing a lot of money, he finally realized that his compulsion of trading was going to ruin his career as a trader, and fortunately, he stopped doing that. So, if you want to be a professional trader, learn to do the post-mortem of each and every trade you take. What were right, what were wrong, and what could have been done better. Find each and every mistake that can be fixed and promise yourself not to do those mistakes again. The fifth reason why traders fail is that they trade overhyped stocks. They trade stocks like Fakrangi, PC Jeweler, DHFL, Suzlon, Reliance Communication, basically all those stocks that are making news for the wrong reason. So traders see those stocks going up or down, some 15 to 20% in a day, and they just get fascinated with them. On the top of that, everyone around him seems to be talking about the same stocks. So their fascination grows even higher. They start to feel that everyone is making money from these stocks. So why should they be left behind? Everyone seem a while they do get lucky for these trades. But for every profitable trade, they take 10 other unprofitable trades. So at the end of the day, they just lose money. Professional traders stay away as far as possible from these stocks because they know that a lot of times these stocks are manipulated by operators and these stocks are really not worth trading. The sixth reason why traders fail is that they go against a strong market trend. When the market starts crashing, they tend to buy, and when the market starts to move upside strongly, they tend to short the market. Let me tell you a personal story from my early days of trading. Some months ago, one day, stock of Nelco National Aluminum was falling down. Not only Nelco, but the whole metal sector and the market was coming down. So I thought, well, Nelco is a big company and the stock has already fallen 20%. How much more can it fall? So I bought Nelco, but then it fell down further. So then I added more quantity to my position. I kept doing that 5 more times. Needless to say, I was completely wrong, and that one trade costed me around 40,000 rupees. That was a big loss for me, but it taught me a very important lesson. Never stand against a strongly trending market. The seventh reason why many traders fail is that they give up easily. Traders come to the market, try trading for a couple of months, get disappointed by the initial failures and just give up. What they don't realize is that trading is a skill, and just like any other skill, it requires time to learn. What would you say to first-year medical student who is thinking of quitting MBBS? Because he's not making money at the time, he will say, first finish your college, gain some experience, and then you will have all your life to make money. That is the power of building a skill. In the same way, my advice to every beginner is to first learn the skill of trading. It requires a good 6 months to a year to be good at trading. So, if you quit before that, you are not giving your dream of becoming a trader a fair chance. Don't come to the market with the expectation that you would be profitable in the first month itself, because it's a very unrealistic expectation. Alright, there you have it, the 7 reasons why majority of the Indian traders fail, and I really hope that you will not make these mistakes. That's all for today guys. If you learned something new, do hit to the like button and do subscribe to our channel. Thank you so much for watching this video.